right. So as Shelley said, we're going to talk today about using Elliott wave as well as Fibonacci pinball, which is Avi Gilbert's addition to Elliott wave to generate extra portfolio income. So some of you might be familiar with Elliott wave, some of you might not. So we're kind of going to give you a crash course of the structures that we look for that really define what Elliott wave is. And for the most part, we view that as a framework that provides context to the price patterns that we see within markets. A lot of our approach in stock waves, as you'll see, is really geared towards presenting things in more of a swing trading approach. But because we look at things in multiple different timeframes, which we'll talk about, it gives some of our members an opportunity to either day trade at smaller timeframes or use our charts in other ways, which we'll talk about one of those methods to generate some of that extra portfolio income. So there are really two main structures to Elliott wave. We have the motive waves, which advance the pattern or move in the direction of trend, and we have corrective waves that retrace or correct or run counter trend. And most of the time, those are discussed about in terms of a 1, 2, 3, 4, 5 wave moves and ABC or 3-wave consolidations. The two main versions of a motive wave are the more standard impulse and then the less common diagonal. We're not going to spend too much time talking about that diagonal, but it is important to know that there's a pattern that is comprised of mostly corrective structure that does subdivide and fill out 5 waves that breaks some of the rules in some places as far as wave 4 is allowed to overlap and you don't get as much extension and really can give you a kind of some false positives if you aren't attuned to the potential for that type of structure. So we might come back to that in a little bit if we have time. But one of the main things that we look for whenever we have a possible significant bottom or top in place is we're looking for that first 5-wave move and 3-wave retrace. And because Elliott wave is fractal in nature, that first 5-wave move and 3-wave retrace is either a 1, 2, or maybe an AB start to a larger portion of the pattern. But it gives us a setup to use our Fibonacci tools and other tools, and we'll talk about Fibonacci pinball in just a minute, to project a high probability swing off of that ideal low for the wave 2, or some cases it's a B wave. So we're talking about, we have this 5-wave structure and we have a 3-wave retrace that we're going to use our Fibonacci tools and get an ideal fib zone where we think this should have support. But then we can take the measure of this entire thing and using the Fibonacci extension or Fibonacci expansion tool, I don't know what your software uses. And then after we think we have a possible bottom in place for this wave 2, we can project that forward off of that low for the wave 2. And so that's what we have here in our blue Fibonacci expansion tool. It's just the measure of wave 1 projected off of that possible low for wave 2. We can see our 100% measured move takes us up to here, the 1, 2, 3, 6, the 1, 3, 8, 2, 1, 6, 1, 8, and so forth. So Fibonacci pinball is what Avi recognized is that not only do we look at things as a fractal nature, and Frost and Prechter in their book on Elliott wave principle did talk about how a 3rd wave is often going to tend to head towards the 138 or the 1618 extensions. But what Avi noticed with surprising frequency is that the subwaves inside that 3rd were very often going to come to the 382 or the 0.50, get a normal retrace, and then the 3rd of that 3rd was going to head to the 100% and then get a 4th wave, and then the 5th wave was going to head up to that 1382. And so that's what he dubbed as Fibonacci pinball. And sometimes you'll get a little bit higher or more extension here, and then you can bump everything up a level. But we have that subwave 1 inside the what's filling out as our 3rd, going to the 382. We get a wave 2 retrace, then we get the 3rd up to the 100% extension, Then we get a fourth wave retrace to either the 764 or the 618. And then the fifth of the third up to that 1382. And that happens so often as far as the subwave structure that when we get something that doesn't quite look right in terms of that wave one and wave two, then we can automatically be on the lookout for something else playing out. Maybe it's a deeper consolidation for the wave two, or maybe this was a terminal top of something else. And we can continue to use the same Fibonacci expansion tool to look for the rest of the wave four, and then again the wave five heading up to the 1618 or the 1764 to get continuation of the structure. And the nice thing about Elliott wave is because it is fractal in nature, we can zoom into any part of this structure at a smaller degree and see the same pattern unfolding. You know, we can have a 1-2 start inside the fifth wave of this wave three and do the same Fibonacci pinball at a smaller degree. And just the same way, we can zoom out even longer and we can see a much larger trend at play and know that while we might be in a larger degree fourth wave starting at a much larger degree trend, that gives us bigger context, but we can still zoom in and look at structures at play at the smaller degrees within that structure. As I said, sometimes you get a little bit of a stronger wave one that gets up to the 618, the 0.618 extension. In that case, your wave three of three will go to the 1236, and the wave five of three will go to the 1618. Your fourth will hold a little bit higher, and then your fifth wave will get all the way up to the 200%. Sometimes you get a little bit more extension in your third. In this case, they went all the way to the 200% extension for that third of the third, and then the five of wave three. And so then you get more extension out of your fifth wave as well. And then even inside a diagonal, you have what does fill out its own version of Fibonacci pinball. And like I said, when we get something that goes past this 382 to 0.50, and certainly if it gets past the 0.618, then it automatically has us starting to think that, whoa, even if this looked more like a possible five-wave move up, we should be looking at this as a possible diagonal or something else. So that's where we look for the A wave and the B wave inside the third, and then the C wave of three only getting to that 123.6% extension, allowing for overlap into deeper wave four, and then an ABC up for the wave five. So that's kind of the crash course in the basic structures that we're looking for. We didn't want to spend so much time on that today. We have a lot of great educational information that you can find even for free under the help tab in our education section. A lot of great introductory webinars that Garrett and myself and Jason and some other people on the site have done. What I wanted to look at today was how we present those setups within Stockwaves, and how you can use some of those setups if you're not necessarily looking at it as a directional swing trade. If you maybe have a certain investment mandate for a larger portfolio that you take care of and that requires you to be mostly long, perhaps you're just looking to hedge opportunities or to generate that extra income when the chart says, hey, there's a high probability that we're at resistance. So in the beginning of February, we were pretty much had finished the easy part of a swing move up off of the December lows. We posted a lot of swing long setups near the end of December in Stockwaves, and then we started to post some short opportunities at the beginning of February. And I wanted to look at some of those just to say, you know, if you were still more in the long camp, looking for things to continue to head higher, you know, these were some opportunities where you could at least enter in some hedges and generate some additional income, or some other opportunities that we'll talk about in just a minute. But this is a highlight of some of those short setups that we had posted at the beginning of February and on in through the end of February. We have Walmart here, ITW, US Steel, WBA, PAYC, Bank of America, WTW. We did a short-term trade long on SMH and then JBHT. So this is just highlighting some of those shorts from earlier in February. So the first one here was BAC. and posted this as a shortwave setup. We had been looking at a possible risk of an ABC flat topping, or at least an A wave of a bigger flat topping back here in November. And into the December low, we saw a possible 5-wave move down as wave 1 of that C wave. So sometimes C waves are 5-wave moves. So we can look for the same kind of 1, 2, 3, 4, 5-wave structure that we would look for in any normal 5-wave move, whether it's a C wave or a third. So we were looking for a corrective bounce. There was a potential that we could get something more bullish, but this really filled out as an ABC corrective bounce for that wave 2 into a normal fib resistance. And at this February 10th, when we posted this, it was possible to sell July 37 calls on Bank of America for 195. So say you were holding a Bank of America long, maybe you were more in the camp of trying to look for this alternate C wave higher in a wider flat for the B wave, or it was just a position that you've held for years and years and you're not ready to sell it. You could sell covered calls against your position. So that, at 37 at resistance, it's not going to give you a complete hedge for a possible move that heads down into the low 20s, but it does allow you to at least generate some extra income and hang on to those shares, maybe at least just until it starts to actually break some support and look more like a confirmation of the start of the wave 3. So fast forward a little bit to a more recent chart. This is as of yesterday. And we did fill out 5-wave move down as a wave 1 start to that wave 3, got a quick little bounce as wave 2, and then started to accelerate on the move down in the heart of the third. This could really be all of the third inside the C wave on Bank of America, but my preference would be to get a 4th and a 5th, and then that actual wave 4 and wave 5. So 4th and a 5th of the C wave of the third still, excuse me. But those same July 37s are now only 20 cents. I probably would have covered some of them and then resold on a bounce or on the break of support. But again, you can see how that even if you're not trading this directionally to the downside, there is a nice benefit for that covered call strategy. Walmart is the next one that I wanted to take a look at. And here, this is from February 9th. We have the A wave and the B wave at a larger degree off of the high in a start of a much, much larger potential cycle degree or super cycle degree wave 4. Looking for more of a C wave of that primary A wave to fill out towards the 100 region. But in the very short term, we're actually looking for a shorter term move higher as more of an ABC flat for that wave 2. And we did end up reaching into that ideal target region for the wave 2 bounce and into the middle to February 15th to February 21st. And at that point, the June 150 calls on Walmart could be sold for a premium of about $5.85, which is a very nice premium. And then we can fast forward to a more recent chart. We did turn down from that 150 region, got what looks good based on our Fibonacci Pidball, a little bit past the ideal 618. So we do need to be on the lookout for this maybe being an A wave and a B wave of a diagonal for that parentheses wave C. But we can give this the benefit of the doubt because we are looking for much greater than normal fib extension to get to a 100% fib for that parentheses wave C. Still treating this as a 1-2. So when we did have 5 waves down into the 200-day moving average as our possible wave 1, when we started looking for that bounce as a wave 2, those same calls were down to $1.30. And now, as we are close to our ideal resistance region as the wave 1 and wave 2 inside the third of our C wave down, the June 145s are going for about 430. In September, 145s are going for about in the 7s. So another good opportunity that, if we get over this resistance, then it's probably more than just maybe an alt wave two, but a good opportunity to draw down some additional premium there. Next, wanted to take a look at US Steel. We're looking for a possible start to a C wave. So we have this nice ABC that ideally counts complete into the 32 resistance region, but some potential to retest that 32 level and get a little bit higher, which is what we actually saw. But from right here, the July 30s could be sold for 325. And while we did retest that 32 region again, they were not quite in danger of being called away yet. And fast forward now, we are mostly done with what looks good as 5 waves down for wave one. I would like to see maybe a little bit more of a 4th wave bounce and a 5th wave lower, and then we can get a corrective bounce as wave two. But even if you were worried about that starting to bounce on you now, you could cover those July 30s for $1.40 now, and then look for that corrective bounce as an opportunity to restrike some other covered calls to drag down for more of that C wave from the resistance of any corrective bounces wave two into maybe later in April or beginning of May, possibly. The next one that I wanted to look at is WBA. Now, there are some charts that I skipped over, JBHT and PAYC. Those got nice moves down in line with our projections, but the options liquidity is not great for those. So, you need something that is a more liquid name that has, good liquid options that allows you to sell covered calls for. And so WBA was another one. Here, allowing for a little bit higher and more of a wave two bounce, but it wasn't completely needed. This could count as an ABC complete already. So again, when we fill out as our parameters for the short setup, the risk reward allows for more consolidation as the wave two for the target of the C wave down. But is certainly possible that this was already starting the 3rd wave, and could use that as an opportunity to, where did I add? Oh, here we go. It's just hidden in blue. I was looking for the yellow. So here, June 35s, we're going for about $3. So that gives a little bit of room. That's pretty much a little bit at the money for where they are now, and allows for the bounce more to the 38-39 region. And then those same June 35s here, where it looks like we have an ABC move down for a larger wave one and can bounce in more of a wave two, could be covered for $1.20. And then when we get that clear ABC bounce as more of a wave two, that's another opportunity to restrike, assuming you wanted to continue to hold the shares long. And you could also use the strategy as just selling call spreads instead of selling as covered calls as well. So instead of outright shorting or purchasing puts. Then wanted to take a look at some of the energy stocks. Devon is one of the names that we've been short since early in January. We saw this filling out as a possible 5 waves down for wave one, or even at least an ABC for wave one, and looking for a wave two. Got a little bit more extension, but still held in the normal fib zone as an ABC flat for the wave two, and has been filling out very, very nicely to the downside as well. So this one is, maybe getting closer to the end of its move down. So, instead of selling more covered calls on a name like Devon, this might be one where you say, what, I'm certainly willing to take on some shares in the mid to low 30s. But I don't want to buy it now because it looks like it needs to head lower. So you could start, just using some, cash covered puts as a placeholder and saying, all right, instead of buying my first batch of 100 shares, I'll sell a put, in that 36 region. And if it gets down to the 3250 region, I'm probably going to get put those shares at the 36 put. But that's going to be pretty much what I was looking to buy them for anyway. COP is another one that we posted early in February as a short wave setup, as the 1-2 start to a C wave down. Very similar to Devon, looks like it can get a little bit lower as the wave 3, then bounce in a 4 and a wave 5. Ideal support in the mid to low 70s. So can start looking at opportunities to, put those placeholders in effect. Not necessarily looking to shell out the cash to buy shares, certainly not when it looks like it has unfinished business to the downside. But say we do get this alt, some of these energy names can count as an alt wave 3 into the top that they saw in November. And so if that's the case, then this could be closer to finishing an A wave of an alt wave 4 and can get more of a bounce as a B wave. So even though it looks like we should get lower in the ideal count, because there is potential that it gets a bigger bounce first, selling, an 85 or an 80 put that is not likely to get exercised, even if we fill out more as the impulsive path down for the C wave in white, because you're going to get maybe more of a wave 4 bounce, or not get low enough that it's going to get put to you for the 3rd before it gets another 4th wave, and gives you plenty of opportunity to just erode the premium of those puts without actually jumping on any shares yet. Similar for XLE in terms of the potential to fill out more into the downside, and getting a little bit of choppy movement here as we hold the 70 region before getting the actual 4 and 5 down into the 60s. And again, a lot of these we're looking at significant resistance into the end of May and June, as the top of this wave 3 had a nice move down, but then they were being a little bit stubborn in terms of turning down from the ideal top of a B wave here and getting a more extended B wave bounce into November. But there were plenty of opportunities if you weren't looking to outright short these yet, or you got stopped out of some of those outright shorts. There were plenty of opportunities that you could sell covered call premium on a lot of the energy names, as we're continuing to just grind out and round out this top before getting the movement down in the C of 3, a C of 4 that we're looking for here. Another way of using some of our analysis, again, we talked about the cash covered puts. We're looking for a swing move higher at the end of December for a lot of things, as a C wave of a B, or in this case, possibly the C wave of just the A wave of an even larger B on AMD. So we've filled out most of this move now, as we'll see on the next screen. So we hit our original targets. And at the time in December, we were saying it's possible that, especially if this gets closer to the 107 to 110 region, which is the 618 retrace, then it can be all of that circle, the larger degree circle B wave. But back here in December, we're saying, there's a good chance that this is just going to be an A wave. It's going to hold a B wave retrace and then head higher. So fast forwarding to the present, we have most of our B wave filled out. I've since switched, because of the way most of the other things in the market count, that larger ABC flat for the circle B wave, I've made that the dark purple alt that's maybe barely visible on the slide. So sorry about that.
Hey, Zach, I don't mean to interrupt you, but you are at your 5 minutes.
Okay, great. I think I only have like one more to look at, and then we'll take some questions. So here, our original expectation was maybe that this was only going to be the A wave. We're going to consolidate in a B wave and then have a chance to head higher. I think there's greater risk that more things are completing this move. So from right here, we haven't confirmed the possibility of the start of a short setup yet, but we are in a pretty significant resistance zone. And certainly if we get a little bit more extension towards the 100 region, the July 100s are getting into the 10s. The September 100s are probably going to creep over $15 as a premium on for selling some of those calls if you don't want to get rid of all of your AMD shares. All right, I have pretty much the same on SQ. I'll go ahead and stop there and we'll take a few questions.
Hey, very good. You may have already covered this in the last few minutes of your presentation, but there's a question. It would appear from looking at your stock wave charts that you're expecting the market to fall significantly by fall of this year. And if that is correct, are you and Avi expecting the SPX to start falling toward the 2,700 region soon? And if so, when?
So I intentionally, only hinted at a few of those things in the presentation here. Like you can see, there's a lot of mixed signals right now, actually, which fits because even if we are heading higher, we're in a B wave before a larger C wave drop down. So in that corrective B wave bounce, that was many things have looked complete off of the October or equivalent lows into the highs that they saw in early February. But there's a number of things like this SQ chart that really look like they're going to try and hold some support here to potentially be an even larger B wave bounce. So just now being the larger A and B of a much bigger B wave bounce. So, we really like the potential of, shorting the things that look like clear short setups and being long the things that have good risk reward on the long side, and just playing that diversification because there are so many cross currents. Some of the tech things didn't correct as much off of the February highs, so those look more like they held as a possible 4 and are completing a wave 5, like we were looking at on AMD and SMH and other things by extension. Whereas a lot of the Dow things didn't get as much of a move higher and look more like they only topped in their A wave and got a wider flat as a B wave, and want to try and head higher in a swing wave move up from the lows that we just struck in mid-month.
Okay, what do you see for TLT?
I'm actually very bullish bonds off of the March lows. So as long as we hold that, then the 30-year and the 10-year Treasury, which I follow a little bit closer as far as the subwave price action than TLT, because TLT is kind of a blend of those two bond futures durations.
Okay, very good. That does conclude our time for this session. I want to thank you all again for joining us today, and thank you, Zach, for your presentation. And please
My
be sure
pleasure.
to stay tuned because we have a lot more in store for you today and tomorrow. Thank you.
Thank you very much, Shelley.